Welcome to Nasdaq Trade Talks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, and regulatory landscape and capital markets. I'm your host, Jill Malandrino, and joining me on the desk at the Nasdaq market site, we have Jonathan Todd, partner at Benesch, Monica Gorman, managing director at Crowell Global Advisors, and Daniel Cannistra, partner at Crowell Moring. We're here to discuss the intersection of transportation, trade, and supply chain policies. It's great to have all of you with us. Welcome to Trade Talks. And Jonathan, when you wrap your head around this transportation, trade, supply chain, there are so many frameworks, whether it's public, private, funding, environmental impacts, global policy, packed into just those three areas.
That's right, that's right. The number one challenge right now, what I'm seeing across clients is simply awareness. There's so much going on and there's so many drivers of change today for global supply chains. It can be U.S. policy on sanctions, it could be U.S. policy on export controls, certainly U.S. policy on imports. Tariffs are top of mind for everyone today. And then just the modernization of supply chains, integrating AI and technology as best as we can to build the very best, most durable supply chains on a global basis. These are incredible times. I think a lot of folks are doing it well, but there's a lot up in the air, and we need to see where the dust settles.
Yeah, and Monica, we saw that during COVID with the constriction on supply chains, and now, but we knew there was going to be light at the end of the tunnel when that situation was resolved. I think part of the challenge is, what's plan B? What does execution look like? How can I think about not even just my near-term tactical strategy, but longer term? It's not something you turn around overnight when it comes to supply chains.
Yeah, no, that's absolutely true. And I think the biggest challenge right now is the volatility and the uncertainty. And that is the antithesis of building supply chain resilience. You can't really make long-term changes in your supply chains when you don't know what the tariff structure is going to be tomorrow, when you don't know what the geopolitical situation is going to be. So it's really challenging for business right now. I think folks have seen, sort of coming out of COVID, the need to diversify supply chains, to build redundancies, but where and how, and when you're not sure what the tariffs are going to be tomorrow or next week or next month, it's more likely that businesses are going to sit on the sidelines and say, okay, I'm going to sit here and wait and just see where the dust settles before I make any big capital investments.
Yeah, and I think we're going to start to see this in the corporate reporting season in July and August, where the tune is going to sound a little bit different coming out of management, because it's trickling down, and we're starting to see it reflective in consumer pricing now.
Absolutely. The inventory that came in before the tariffs took effect is beginning to wind down, whether it's 30 or 60 days worth of inventory. The new material that's coming in is going to have the tariffs imposed. And not only are they going to have the tariffs imposed, but the shortages are going to begin to emerge as well, which itself will have an impact on price. And so I think with the second quarter of this year, we're going to start to see that impact on the financial statements.
Yeah, and I think part of the challenge with that is if there is a reversal in policy again, companies are going to be less inclined to invest in the U.S. where, every couple of months, every administration, every midterm, that you're having massive policy changes.
Absolutely, and I expect at least two big new policy changes. First, we have the reciprocal tariffs that are supposed to go back into effect at the beginning of July, go from 10% to their individual country rates. Then we have appeals that are at the Court of Appeals for the Federal Circuit, whether or not those tariffs will even be maintained into the summer and the fall. And then we have a whole series of other tariff actions that we expect at national security later this year on copper, semiconductors, pharmaceuticals, lumber. All of those are still in the pipeline. So I expect at least 2 or 3 more major changes before the third quarter of this year.
Yeah, and Jonathan, that's just the physical aspect of it, but when you think about what's going to happen with data protection and governance and cybersecurity, national security out of all these issues is the one that's most prominent in my mind.
Yeah, that's absolutely right. So we had, for example, the Colonial Pipeline attack in 21. And after that, there was a great effort by corporate America and driven by federal policy to focus on the cyber issue. We have the growing questions of personal privacy and data protection and biometrics alongside this, and of course this global geopolitical and political risk that everyone is facing. It's a real challenge right now. What folks need is certainty. I agree that I think by, let's say, Q3, we may not like where the dust settles, but we'll have an idea where the dust is beginning to settle. That will allow corporates to go from tactical planning, which is all anyone can do now because everything is changing daily, to more strategic planning. This is what we need. And part of that is going to be what's happening with tech. Now we're talking about tangible things, right? We're talking about infrastructure investment, CapEx, R&D. We're talking about actually moving product on a global basis. You can't digitize all of that away, but everything I hear from my clients is that AI will be a huge part of the solution, kind of in every way, from production to sourcing to asset use to actually inventory management and delivery to consumers. It will be a big part of this. In the United States, we don't have a comprehensive policy around AI and many of these other issues that is emerging elsewhere around the world. So it's a challenge. I think companies are left to do their best in this moment in time, but again, the dust will settle at some point and we can get back to good strategic planning.
Yeah, and Monica, that's part of the challenge because, you know, let's call it at least S&P 500 companies, they operate on a global basis. And how privacy and AI law looks in Europe is certainly different than not even the framework that we don't have yet, but my thoughts are the framework that we will have in place are fundamentally going to be very different.
Yeah, that's absolutely true. And I think industry is looking for signals from the administration in terms of what cooperation may there be with Europe or with other regions of the world to start to develop some of these frameworks so that there is some certainty. At least are we looking at a different North American regime from a European regime, from a Southeast Asian regime? There's just no clarity at the moment in terms of what that strategy is going to be, and is there going to be cooperation to start to build that? So again, challenging for business as they start to think, where am I going to invest? What am I planning 18, 24 months out? Hopefully we'll start to see more strategic sort of alignment from the administration, but
yeah.
Just to put a very fine point on this, on a global basis, that's right. So you have an EU AI policy now that will have a compliance date coming in the near future. In the US, you have no unified approach to this. But I have clients, you know, across the country who, even on a facility level, will have challenges. If we take biometrics, it's not uncommon today to walk into a facility for production or for warehousing and fulfillment and to have biometric technology used for managing production and managing the staff of that facility. This leads to that patchwork quilt of laws that everyone hates. So today, compliance across the country on all of these issues is fragmented. That's hard to manage from a corporate perspective. And if you take a step back from the global perspective, you do have a more blanket approach in some regions of the world that we just don't have here. This may change. I think that's a crystal ball question. But if it does, then that would lead to greater certainty and greater ability to deploy capital for CapEx and for R&D.
Yeah, Daniel, my concern is this breakdown between public-private partnerships. You need government, business, civil discourse, academia involved in order to execute on a lot of lofty goals that we have here.
There are a lot of lofty goals, and if the ultimate goal is to build up U.S. manufacturing, the challenge associated with the lack of coordination right now is how do you build a manufacturing plant in the U.S. if that is the desire? Because you need a few things. You need machine tools, but we don't happen to produce enough machine tools in the U.S., so I need machines to bring into the country to produce something. I need raw materials. It will be years before raw material suppliers develop, if ever, for certain commodities that the U.S. just simply isn't good at producing right now. So how can I even begin to build a U.S. manufacturing plant when I can't get either the equipment or the raw materials that I want in the U.S., and I don't even know how much those things will cost 6 months from now. So I absolutely agree. We need better coordinated policy amongst all those areas so we can implement a coherent economic policy and get the stability that Jonathan was mentioning that businesses need in order to move forward with their investments.
Yeah, you were talking about stability. We were talking off camera before, speaking of stability, that washing machines are up 50%.
Yes.
I mean, how do you budget?
And almost stealth tariff put in place on washing machines that are now deemed to be effectively a steel product, and washing machines being cast under the umbrella of a national security tariff, and as a result having a 50% tariff put on washing machines. Now, that may be great if you happen to be making washing machines in the US, but what about the steel that those washing machine producers in the US need to make those washing machines, the Whirlpools of the world, the Electroluxes of the world? So are you really supporting them by putting a tariff on washing machines at 25% in addition to, 50% now, in addition to the 50% tariff on steel? So
Yeah.
you have them both. I'm getting hit on both ends.
And Monica, small businesses, which is a significant employer of the U.S. population, those are the ones that are going to be the most vulnerable.
Yeah, I mean, small businesses just don't have the capital, they don't have the cash flow to be able to manage these things. So if you're a large retailer, a large business, you have some cushion. You have some ability to move things around, you have larger supply chains. You've probably been working to diversify for quite a while. Small businesses just don't have that luxury. They sort of have to take what they can get. They don't have the leverage with their suppliers. They're probably a smaller buyer relative to some of their larger competitors. And so they're going to get hit. There's nowhere for the tariffs to go except potentially onto consumers, but consumers also may not be willing to pay those prices. So it's a really tough time for small business, and we're starting to see those that advertise on social media, we're starting to see going out of business because of tariffs. So it's really tough, and there's not a lot that small business can do here.
Well, I think it's tough to have a conversation as well, Jonathan, with the government and the administration, because there is fear of retribution, for lack of another term, for trying to have these constructive conversations. I mean, we have to, call a spade here.
Yeah, there's some cold hard facts here that Americans just need to face. One is that we're in a higher cost operating environment. We simply are. I've been telling this to clients since December of last year that it was coming, and we're here now. What that means for small business is that there's a natural tension with your suppliers and with your customers. And small businesses aren't well positioned to internalize those differences and to negotiate. If you're a larger company, maybe you can negotiate. I know many clients who are and who have throughout first and second quarter of this year to help rebalance cost on a global basis. But still, there are fundamental challenges. I mean, these are additional costs that have to go somewhere. And going back to the investment piece, this is incredible. So I literally have clients who had plans to make investment in the United States in Q1. And then as all of this unfolded in Q1 and Q2, those pencils went down because everything became tactical. We need to get back to a place where there's some level of stability, and we can again talk about investment. It's a good question whether that happens in the United States versus elsewhere in the North American trading bloc. But we need to get back to that point again so that maybe there's some calm for smaller businesses to do what they need to do, and bigger businesses can really get back to work and put people to work and run their shops.
I certainly agree with that. I have clients that would like to import machines to make things in the U.S. but cannot afford to do so. And so they are choosing to do nothing in the meantime. And these happen to be machines that aren't produced in the U.S., nor will they be produced.
So which means we don't even have the skill set for the workforce to get said machines produced.
Correct. They would start up a factory within 6 months to start making things in the U.S., which is exactly what this policy is seeking to do, but cannot import the machines at a reasonable cost in order to set up that factory. So they do nothing in the meantime.
Well, and if you don't have the people that are able to operate the machines, what's the point?
Absolutely.
I mean, as somebody who's spent time in government, I think if I were advising the administration, I would say two things. One, there's a huge opportunity here to take a strategic approach and really think about what are the key industries, the critical ones that we need to make in the United States, or we need to diversify away from more adversarial nations. Let's be clear on what those are and send a strong signal. Secondly, there's a huge opportunity to build really innovative public-private partnership structures. So companies run supply chains. The government doesn't run supply chains. There's a lot the government can learn by sitting down and talking to companies and understanding why certain decisions are made. And we need new public-private innovative ways to have those conversations because, I mean, let's be honest, before COVID, we didn't really think about supply chains in the government. And so now we're still really learning, but there's a real opportunity here for the administration to think about this and say, okay, how do we bring business in a new way and sort of work together to build the right kind of strategic approach that's going to build more manufacturing in the United States and diversify away from adversarial nations to build those more resilient, redundant supply chains so that Americans can get what they need when they need it.
Right.
So here's a practical example of this disconnect. In the Trump 45 administration, we all know the tariffs that were rolled out for imports from China. And we all have clients who went on sourcing tours, particularly through Southeast Asia and elsewhere, to find capacity and to make investments in manufacturing to support this decoupling and manage the tariff exposure. I have clients who woke up on Liberation Day and realized, maybe I'm out of business. Maybe this is bankruptcy for me because, let's use those countries as examples. Let's say Cambodia, let's say Vietnam. The tariffs on Vietnam were up to 47%. You know, there's no one that can take that shock to their cost basis, especially after making investments because they thought that they were supporting U.S. policy. there's room for improvement, that this isn't entirely negative. There's opportunity here for government to work with companies. I have clients who tell me all the time that the government knows nothing about supply chain. I know that some of this was kicked off, but maybe there's more to be done. But it's a real important disconnect that actually has material impact to businesses, and I don't think there's enough focus on it today.
Well, I mean, to the Trump administration's 2.0 credit, look at how they've worked with the digital asset space. And now that we're seeing framework come around that, you're seeing the brain drain being reversed and coming back here. So it actually has an example that it can use with its own success and apply it to other areas if we want to be the innovative leader in the world. I mean, I think that's a perfect example, whether you agree with the ethos behind digital assets or not. It is an example of how industry and advocacy and working with the government and getting that understanding, which, by the way, has bipartisan support. I mean, it can use itself as its own example.
Yeah, no, and I mean, I just emphasize this bipartisan support, particularly when you're talking about national security or economic security. I mean, there are real national security implications to having supply chains for certain types of products located in certain adversarial nations. And I mean, the president has talked a lot about antibiotics, and that is a real national security concern. We do not have a resilient antibiotic supply chain. So there's real opportunity there, I think, and there's bipartisan support for doing this.
Yeah. If there is bipartisan support, what's holding it all up? Is it just because tariffs are front of mind and it's almost one-track minded in a respect?
I think the anti-China trade sentiment is driving the dialogue and has essentially cascaded to trade generally. Certainly the first Trump administration was really all about Chinese trade for the most part, and there was bilateral opposition, or support I should say, for reducing trade reliance on China. But I think both the Democrats and the Republicans haven't quite figured out where does that stop. When we talk about Vietnam and Cambodia, for example, is that really an extension of China that we're talking about, or are we in fact talking about now friendly trading partners? What about the European Union? Have they undertaken some of the trade distorting policies that the Trump administration found in China, an extension? And I think the line is still being drawn right now. I think that's where we are. Do we keep going with China and our China policy and extend it to others, or do we compress it back again and focus once again on China and perhaps some other nations with similar trade problems such as China?
I mean, Jonathan, if I'm the EU, I would certainly be thinking about being strategic with what's happening here. I mean, we're even seeing it in GDPR framework as an example where they're looking to make some U.S. companies might consider restrictive a little bit more flexible to attract companies to the continent and talent. That certainly has to be part of their strategy.
Yeah, it's interesting, right? So taking GDPR as an example, China recently passed its own data protection policy, which, this is an overstatement, but has a similar framework in the sense that it is a nationwide policy and that fundamentally it controls the way that you send data across borders and the data protections that are required within borders. So from that perspective, there is a degree of similarity with, on a global scale, the way other regions and other countries are approaching these core issues that are fundamental to business and particularly to supply chain. We sit here in the United States, we have a very different approach. The one thing that I think no one can answer is whether that has other unintended consequences for global trade, right? Is there the possibility of an emerging trade network and trading partners outside of the United States where the United States simply is not as competitive as it could be? That's maybe a question for government affairs or others with that expertise, but it's interesting that could emerge if the United States lags behind global trends. I don't know, maybe you have a perspective on this.
I mean, just building on that, I do think we're not operating in a vacuum. So you may see the EU and Latin America and Southeast Asia start to talk more to each other, and maybe they start to build some regional trading blocks, and the United States starts to be isolated, and so that's potentially an unintended consequence here.
All right. Appreciate everyone's insight. Thanks for joining us on Trade Talks, and thanks for joining me from MarketSite. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.